Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. Plenty to look at today, folks. I'm sure you're well aware of that being with us throughout the week. But yeah, we had some shakeouts earlier in the week and a little bit of a bounce. Today, definitely wanted to hit some markets and sectors that are showing some interesting indications and really, folks, plotting that for next week. So it is good to be back and finish off the week with this class like we do every single week, taking a look at what might have, well, what did move in the markets and what, like we said, is setting up into next week. We'll certainly be looking at, although we do look at markets, we take it down to sectors, industries, as well as individual stocks themselves too. So we'll dive into that. Would love to welcome you all here. We've got Jay Richardson, John, the Noble Savage. We've got Trader Joe and many others here. Wiley, how's it going to Wiley and Michael? We've got Will. How are you, Will, as well as Sharon and others, folks? Any questions, comments you have, throw those in the chat box. We can address those for you. I'm joined in the chat by a very good friend of mine, Brent Moores. He's also a colleague. Yes, he's doing the chat for us here. I've known Brent, I think we're coming up on 20 years, Brent. We had plenty of trips to Chicago too, by the way. So at least 5 or 6 times we spent a good solid week out there together working at those offices out there. But great to have Brent on board. I always remember that about Brent. But with that, everybody, let's dive on to some disclosures and get going here. Information here is provided for general information purposes only. Paper money software application is provided for education purposes only. Now, investing involves risk, including for some products more than your initial investment. Now, there's a look at futures here. We don't trade futures in this class, but that does not stop us from looking at the charts. And just wanted to state that futures and futures options trading does involve substantial risk. It is not suitable for all investors. And let's see, lastly, past performance is no guarantee of future results. Looking at the markets, folks, that's the bounce that I think many of you were happy to see. We're happy to see. We were wondering, weren't we, about some of these prior lows over here. We were still in a sideways channel. I mean, this was, in fact, a higher high we had in the markets. But not everything bounced back today. In fact, some of the companies I know that have maybe been on your mind, some of the Magnificent Seven, the technology is always interesting. Here's one on Amazon. Now, that didn't open up the way that a lot of people expected it to. That's a big dip on Amazon. In fact, they did slightly miss their earnings, but there were some interesting numbers on Amazon in terms of the money that they make in terms of like free cash flow, like 200 billion or so, but the capital investments are like 200 billion. So it's like they were really kind of going in on that. And anyways, a lot of eyes are on capital investments into AI and things like that right now, expansion, and how that really operates on, the income statement and things along those lines. By the way, speaking of technology, we have to dive in deeper on this for sure, because as we look over here, yeah, was sad, not very happy. Some of them are a little bit happier. Oh, with the markets, exactly. Yep, that is absolutely the case. Here is your Mag 7 right there, and I've just plotted it all out like we do every week. This might have a lot to do with what the market is going to do going forward, right? It's a heavily weighted basket of stocks that does have a material difference. Even though minor, somewhat minor moves can have a material difference on the underlying market itself. In fact, let's tune to that right now. I think people are really wondering what will happen here. But before we even do that, let's just do this. Let's block this off. There is a trade out there that some people will look at. You may have heard of it as a like a Donchian channel sometimes, or a rectangle, folks. Although there's been some shorter term volatility, and that can make it tricky on some of the moves as we look at the Mag 7 here. One of the things is that we are still within a triangle. And by the way, we are keeping this range over here. And does that guarantee it's going to go up in the future? No, it doesn't, but it does state that we're still just consolidating after a big run. Okay, so we'll see what happens here. It could be interesting. I want to go ahead and take a look at, you can barely see the chart underneath there, but let's just look at the NDX now. So you've got these companies within the NASDAQ 100, and there you go. There's your bounce. And I think some of you too are saying, yeah, that's an interesting bounce. I might have seen that before. And these are they can be some of the bigger bounces in the market. If you've been in the markets for a long enough period of time, you very well might recognize this pattern. Does anybody have it on the tip of their tongue that wants to type it in? What is that pattern? I'm talking about candle, by the way. Sorry, I should have. There's a lot of there are a lot of patterns out there, but a candle specifically, just to clue in our eyes on this, especially if we kind of close in this range right now, it could be interesting. So we shall see. Okay, Wrong mentions Dow past 50,000 for the first time. Interesting. Industrials have been moving. How's it going, Riceberg? Uh, and Alf, good to have you guys on board. Join us, those of you joining us here. But the Cahold, well, I absolutely could say it could hold. This right here, too. That right there, folks, is a morning star pattern. Oh, Kevin got it right there. The breakdown, kind of a doji type-ish bottom, sort of a doji-ish bottom right there. And then you get the follow-through bar that closes above the high of the low day, which is what we're getting. So the Cahold's there. It might extend back a little bit further, but that could be a positive. And what have we done when we've come back down to these lower levels? Well, we've come up to the upper ranges. This was a little bit lower. We came up to this level, this level. This was a little bit higher. We came up to this level. So there has been a bounce. The real question is that 26,000 right there. Now, it was mentioned the Dow 50K. Let's do a quick look at the Dow right there. $ DJI is a good way to get it. And there you go. 50,000, 13 or 16, whatever. It's right in that range. But industrials have been interesting. And we've seen that in this class, haven't we? We've definitely seen that particular chart going up. Now, one thing I wanted to state too, and this is held true, pretty true, to the market itself, S&P 500, the NASDAQ, and that is the market breadth, folks. When we account for those technology companies, well, they have been kind of pushing us down because those Mag 7, they're right here too in the S&P 500, and they do have an impact. They are movers. Right here, you might see that pretty clearly. Where are you? There you are. Visualize these big blocks, heavily market weighted, and they will push it around. And we've been struggling with those. But you know what hasn't been struggling? And there is an ETF out there, although we don't talk about ETFs, and I can't go into the symbol, etc. But there is an ETF that looks for an equal weighted S&P 500. Now, this is an index, but look at that. Now, going back to that comment here on the 50,000, I think Eric, somebody mentioned here. Yeah, it was, well, it's breaking above highs too. And doesn't it look like the industrials a little bit? It kind of does. Over that range, it's been doing actually pretty well. So one thing that's been proven true, that's been holding up, and we have seen that in this class, and we've witnessed this over the past couple of months, and we've talked about it, how it is important, but that is market breadth, right? The breadth of the market. Beat for short, but we're looking at an extended range of companies that, in other words, we come back to this level on the S&P 500. They're all the same size. They can all move the market the same, meaning that we've been getting some bounces in some of the other areas, such as, well, staples is a big one. We just looked at industrials as well. Those are continuing to show strength. And so we just don't know what's going to happen with tech. Sometimes, moving outside that range and looking at other areas could be of use. In fact, let's hit that right now. Let's look at the grid and see what we've got in terms of our 1 week sector rotation grid and just see how it's holding up here in some of these. And we'll just see over the past 1 week, you could see, yeah, tech. This is tech over here. Don't have the labels in yet. Some issues with that in ThinkScript, but trying to still work on a solution. This is, communication services, really the tech, a little bit weaker. I know we're bouncing in tech today, and that's positive, not over here. But if we take a look at some of the other areas, they have held up. Some of the key other areas, energy, utilities, transports. I'm going to hit these right now. I'm just going to maximize this right now. Looking at a 1 week sector rotation gives us a sense because we're using this versus the S&P 500. So how fast is it going up or down relative to the S&P 500, folks? That's what we're looking at with these charts. These are not actual charts themselves. They're just relative to the market. So it does really kind of dig in and gives us a chance to see what's really performing relative to the market. This is energy. We've got a couple of energies to look at today, a few of them bouncing off some longer term moving averages too. And we're going to go through a whole set of those because sometimes you get above the 200 or you've broken up above higher and then you come back down and test it. Well, sometimes you get that bounce that comes back up again as well. But we've got energy here. So keep that in mind. Materials holding up a little bit. Yeah, some of the gold miners, silver miners have bounced back today nicely. There are your financials. Consumer discretionary, not good, kind of like tech recently, but there are your staples right here. Staples holding up over this past week. And again, we look at it over a 1 week basis because with the trend, once that trend, particularly a trend that we're looking kind of minutely at on a relative strength compared to the market, if you start to see it strong here, it can unfold to more strength down the road. Just a couple of others just to go through. Healthcare, quite strong as well. And there you go. Industrials. Really, really strong in terms of the industrials going up higher. Within the industrials, folks, you're getting a lot of transports. And just a quick note, because I'm going to bounce around here just to show you some stocks that fall into that category here as we look at it. But look at this with me right here. So think of transports. Look at Delta breaking out. Remember, this can tie in a lot to the price of energy and how energy's been doing. Energy, folks, extended down for quite some time. We're just looking at light sweet crude right here, but it's also really been kind of flat down through here as well. I know it spiked a little bit, but still kind of flat. There might be a number of energy sources coming on, making that cheaper and easier for some of these companies to move. UAL, there's airlines. There are airlines, right? You know what? Another one that uses a lot of fuel? CCL, Carnival Cruise. Oh, breaking out as well. Take a look right there. You could draw a pretty clear line looking at Carnival right there as we extend this off to the right there. It's still just breaking above 32, but keep that in mind. Okay, this is one we could too. You know, I do like to put some trades on in the class. I'm going to just take a look at a weekly chart real quick and show you where we're at. Maybe there is some room to move on this. I will say this is interesting because you can take something like a long-term chart. This is a weekly chart. This is off the highs and the lows basically right there. Where's your 50%? Well, it's about 8 points higher. And notice where that 50% anchors really, really well, right over there, at a gap and a major level there. So that's real close to 40. Let's just go ahead and put a paper trade on this, just for somebody, just as an example trade of how somebody might trade something like this on a breakout type trade. See how that unfolds here. But let's go ahead and put a, we're going to give it a stop that might be below the low of this range right here. And remember, stops aren't guaranteed to trigger at that price, right? They did become market orders to compete with other orders in the market. Just as a quick note there. Many of you are familiar with that. But that does, if that was a breakout move right here up to right there, okay, it's got a little bit of potential reward on our target range relative to our risk range. And if you look at this closely, and we talk a lot about this in the swing trade class that I teach. In fact, this last week it was all about this, but measuring some of these interesting ranges here, right there to there. Look at that. Do you see it? So this is one that might have some industry strength behind it, perhaps, but this is where markets and sectors are so interesting and so helpful because we're looking at the energy market in general. We're looking at the energy sector. We're seeing one that's kind of moving in here, and we're seeing some recent strength that there may have been, yes, in fact, a cup and handle right there, and that is the potential target for that cup and handle. We use a lot of those actually in the class that I teach over here. I'll just highlight it because if you guys like to look at targets, that's one of the cool things that we do have with price targets. And I'm just over here, right in the Trader Talks channel. Let me just scoot on down. Yeah, just this was it right there. Just the measured move breakout from last week. If you want to take a look and see how those targets work, you can do it right there. I'll go ahead and just copy this link for you. Copy link address. There we go. I'll put that in the chat. We do a lot of those. It really is effective. It can be more effective, though, if you use sectors and markets, to kind of help you out. But I threw that out there for you. If you guys want to take a look at it, it is there in the chat. And by the way, if you're getting value out of this discussion, smash that like button. And definitely subscribe to our channel. All right, with that, let's put the trade on right now. Just a quick trade. We'll put this in fast here. Okay. All right, so we'll just go ahead and go with the standard 100 shares, but I am going to right click and do that buy custom order. So we're going to get our OCO brackets in here. First things first, I always want to set this up, good tail cancel on the potential exit levels. The interesting thing about this was the upside was just under 4 or just about 40. I'm just going to go 39.50. And I'm going to keep this down 1 point below the potential entry price for the actual stop to the downside. And let's take a look at it here. Make sure these are set up. You've got the order in place. Let's go ahead and send that through. Click, click, and we'll just move this guy down just like we said where we would. And that's going to be, oh, right there. Below this level right there. Below the low of today's low. Because here's the thing. This is a breakout trade, and traders here would be looking for a breakout or not. So what is the expectation here? If we went sideways over this range and we went hit, well, the expectation is that it's either going to break out, like we said, or it's not going to break out. But there's kind of a general sense of your perceived risk and reward levels. Okay, wanted to get at least a sample trade under our belt here and take a look at a few different items. Coming back to the sector grid itself, here's a sector grid over the 6 months, and these are the actual charts themselves. Whoops, that's not it. I was off a little. There we go. Right here. Okay, very good. So there's energy. You can see energy really ticking up right there. Breaking up higher, and that's the actual chart. Now, we looked at the sector performance rotation potential on a really short-term basis, but you've got it there. This one I think is really, really helpful. I do post this in the description section down below, though, you guys, so you can get it, okay? Underneath the video as well. In fact, let me just go ahead and share this right now so you have it. This is not a ThinkScript, but ThinkScripts are not guaranteed for timeliness or accuracy, but just wanted to state that it's not one. But it does give you all those charts. If you don't have it yet, want to make sure you have it. There you go. Okay, just sent that through. All right, very good. Yep. All right, so that's that. You can see those others in here. Over here, we do have the labels in place, so you can see as well. So a little bit of action too, just to kind of highlight some of these. There were your staples right there. We saw a number of companies that have run up to the 200-day moving average in this group. I did actually tweet one out earlier today. I'll show you that one as well. There's healthcare, kind of a long, sort of a flag pattern, right? And really curious if healthcare might be on the verge of or being able to break up higher here. So, the question might be, here is healthcare or staples, and what are some of those companies within that group that could participate in that rally to the upside if in fact it does unfold? I mean, at least you can get ahead of that a little bit. So those are some items to look at. Before we do that though, I'm going to dive into that. I just wanted to highlight this real quick because I wanted to show you this before we get into it, because a lot of you are looking at different sorts of trades within the market before we dive into some stocks. But here is the VIX. Now, one of the things with the VIX is 20 has seemed to be, at least over this last year, one of those ranges are very close to 20, maybe slightly above 20, you can see here, or right at 20. Number of touch points, again, slightly above here. But the volatility can start expanding there, and it's always interesting to see, do we get, honestly, the red candles coming in when you hit these higher ranges? Because what that does oftentimes is it pushes us back down lower, right? And remember, the VIX moves inversely to the market historically, right? So if the VIX is going down and we're getting our big red candles here, right through there, that can create a lift for the SPX. The S&P 500 is what it can do to the upside. The key thing here, though, is just to kind of keep an eye on that level. Did we get above it? Did we hold? We did yesterday, but look what happened. We followed through despite, some of those bad announcements from Amazon, for example. Let's go over here too. $ DXY. Quick note on the dollar. Generally, when the dollar dips, asset prices will value higher, but and we'll see if weakness in the dollar has kind of helped the markets a little bit. You see this? Notice how we shot up here, folks. What happened to the S&P 500 over this time frame, and the Nasdaq, for example? It dipped, right? But we are at resistance right there, and if we hit resistance, and we are going down in the dollar, if we start to see more weakness in the dollar, that too could be another pull for the S&P higher. It's an asset, right? Commodities, futures oftentimes can go higher too. Commodities are heavily, oftentimes historically heavily impacted by that dollar. And I'm just showing you there might be resistance of the dollar right there. And bam, that can dip, right? That can dip on down. So there you go. So a couple of sort of leading indicators in there. I'm going to go through our markets and sectors review as well, because we want to get a sense, just generally speaking, how we were doing on the McClellan over here. We didn't, that recovery today, it didn't get us down below the 100, but generally speaking, if you're up on the oscillator right here, and it almost looks like a flag, right? Because we made all this ground and then we're just kind of going flat, all else equal, that can be a positive. This is not range bound. This can go up as high or as low as it wants, right? Notice we go below zero here. No problem. We could go up to 10,000, whatever the case is, but it's showing some strength here, right? And that's a positive for potential of, the markets going higher in terms of the New York Stock Exchange. Now, another look at the NYSE, the NYSE right there. We were talking about market breadth playing a key role. Those other sectors that are now coming in that we're going to look at right after this, but we'll dive into stocks after this. But there you go. SPXEW, we looked at that already, showing strength. Nothing here from the Hindenburg Omen down below. No major 52-week new lows going on. And finally, chart I wanted to get to, we're starting to see some spikes over here. And it was right in line, with some of these SPXEW, the industrials, Dow Jones Industrials hitting new highs. We're finally getting some movement over here with our NYSE, the bigger basket, 2,700 plus stocks going higher as well. So all else equal, that is market breadth. These are highs, right? 1 year highs. So stocks making 1 year highs. Bullish as the index itself is making highs. So again, market breadth, very, very helpful for an extension of those trends. Seasonality, on seasonality, it's been kind of wild and crazy over here, but mid-February, we have tended to spike, but we've also historically tended to rise in March as well. So we'll see if we do get that rise in March. I think really we're going to have to be breaking above some of the volume profile levels. And there's a short-term chart, but there's your NASDAQ weighted. By the way, it's so tech heavy, it's down too, exactly with the NASDAQ. So not a ton of breadth there, but look at that. That's what I wanted to get to for our 1 year chart. And that you've got right there, as you can see, guys, clearly, that is it in terms of, yep, the volume profile, it's at that level. And why this area is so important, because if we start to break below these lows here on the market, this is the ES specifically to get volume. You could bounce a little bit through here, but you start to get down below even a little bit further, like right in here, the volume just really dies off. And so you could dip to the next level, which puts us probably down at these levels. That was a downside kind of projection. That's going sideways. There you go. Kind of like right there. Interesting thing is if you can break up, that's where you can move. A good example of that right now is the YM. because it is making those highs right there. Here was your volume node right there, where you're getting the vast majority of volume coming in at that volume volume profile spike. If we get above this level, well, maybe we can get a bit of a flag pattern retracement up there. That would be a big move, and this would be a huge change from market leadership that we'd seen with technology, especially if technology doesn't bounce back as much. So, like I said, it's breaking out right now. We got to dive into this. What else is breaking out in the Dow Jones? A good quick way to take a look at that, we can just go, actually, our charts, our standard charts, because I want to see what is breaking out. We've got 30 companies in there. We're bound to see definitely a few that look very, very similar to the markets. Let me minimize the Mag 7. And what we'll do is we'll go down to our public folder here. And we'll go right into the Dow. Dow Jones Industrial Average right there. There they are. So I'll pull this up right now. And we'll link it. And let's just take a look at a few of these real quick. There we go. It is linked. Okay, good. So, yeah, and very recognizable companies, right? Really big. CRM. No. No, not Microsoft. That's a tech. Honeywell. Okay. Cisco. That's a technology company, but holding up. In other words, what's driving really one of the strongest indices out there right now? Definitely not Amazon. So there are going to be some big leaders out here to help us. Okay, here's kind of that rotation I was talking to you about in some of these groups, like Procter and Gamble, folks. If I go over here, this guy's been down for quite some time. So narrowing down from markets to the sector, and looking at that industrial sector, we've been down for a while. But sometimes stocks can reverse when they get above a major moving average. So here we go. A simple moving average of, let's say, a 200. There you go. Let's get this in place so we could see it. Yeah, why not? Okay, so we've broken above the 200-day. Okay, what's interesting too is we've broken up above a number of key sort of resistance levels in this group. So staples have really begun to bounce. Now, do some traders want to get in right here? Well, sometimes they'll say it's a little bit long in the tooth, right? I mean, look at, we've run up quite a bit over here, and we are coming up into this level here. We're going to look at more than just one of these, but if you look at that, that's 160, folks. That's resistance here. It's resistance here, here, back here, here. There's a lot of resistance. Sometimes, it might break above and hold support. Some traders are willing to wait for something like that, regardless of what the chart is, or a pullback and a higher low before they might be interested if there was a rotation. But that's a fairly big move right there above the 200. Now, some of these companies, I'm just going to show you one right now. Some will. In fact, I just did where are we? Here we go. I did just a little tweet over here on one that had been moving up, and you recognize this one too. Right in the Staples area, Clorox. This one happens to be right at its 200, and I just said, because a lot of these have already gotten past their earnings too, but many of the staples have staged a recent recovery here. I was thinking of you guys in this class when I put this up, but that is one that has been down for a while. Could it represent a change over here? Are we starting to see just the beginnings of an upward change in trend? I posted a few of these within this group. If you want to check it out, you can do it right there. Be sure and follow Brent at Brent Moore's CS as well. Okay, getting back to that, let's just hit a few more of these on this breakout range and we'll see. So 3M, clear industrial company, not quite breaking out. It's a little bit of a laggard relative to the relative to the Dow, broadly speaking. But I mean, we're very, very close to it. Quick look at the weekly. Oh, wow. You've had some resistance there as well. So the measured move on a breakout here would basically take this lower range in the upper range, and you're simply just going to add that up. There are a lot of different things that come up, though, with that measured move that are of interest. But yeah, you basically just take this range to the upside as an upward move. Of course, I have to state this. It has not yet broken out yet. And what I've always said, although years and years ago, I used to just buy right, I mean, if I like something, I might buy it, even if it was anticipating the breakout. But really, folks, if it's not broken out, like I like to tell myself, it hasn't actually broken out. If it's not broken out, it's not broken out. And one, two, three, four, five, maybe five times or so, we have not been able to break out. So you're not really giving up too much if it breaks out and then begins to run, or whatever the case might be, to wait on just generally companies like that. Give it some time. Now, Apple's been bouncing back pretty sharply as well. There's your healthcare with Amazon. Really, really interesting move in terms of just massive strength out of the gates with Amgen. Travelers, go through a few of these. McDonald's is broken out of a range. That range extends all the way back over here. It's kind of a broad range of companies. Now, look at that on VZ. Been down for so long over here, gapped right up to its 200. There's a good example. And it shifted very, very quickly too off that point. Nike. So here's one coming off the 200. You can see hold, hold, hold. Will it break it? We shall see. Walmart, some others have been strong, but just a quick note, NVIDIA has been on there. I sent a little, just ignore this. This is just one of the, in one of the stocks that we're following in the swing trade class, but a quick note, sometimes when stocks meet long-term horizontal resistance with a moving average, sometimes that's when they spike. And that was one that was right at the 200-day right there. And that's a really massive, if it holds this way, and it very well might. That's a big bar. It's only got 30 more minutes left to hold, but that's a very, very big morning star pattern over here too. So again, this could be helping lift the Dow Jones Industrial Average higher, even though it has not broken out yet, or if it will break out. But that's just a big move today. I mean, it's up almost just under 8%. But again, that's where those two kind of intersected here, those two lines that came in. So a good way to look when a company's breaking, an indices is breaking out, a market, a sector, whatever the case is, that's one good way to do it. Now, some of the others too that have been along some of these longer term moving averages, I'm going to throw these out to you guys so you can kind of see them. But we have a couple in here like the energy we talked about. We'll just go full screen. I'm going to keep the 200-day up there, minimize these guys. There we go. So some of the other companies that have been there, like MSI, one we haven't talked about for a while, Motorola, right at the 200-day. So some of these could be shifting. T for AT&T, just above the high. I don't know where T-Mobile is. Oh, it's been down. It's really kind of lagging right here. Interesting. Okay, so you got T-Mobile. I said the Clorox one. There's also like Cigna right at its 200-day. This is interesting too, because a break above here would be a break above the 200 and a major fill of the gap right there. This kind of looks like a little bit of a zigzag pattern. We'll see what does unfold here. Some of these have been down though. As tech has been up, we'll see if that rotation does follow up. But getting into, you guys have probably heard of, well, yeah, Kroger. Actually, this one, a little bit different from the last one, but similar in a sense, but kind of filling that gap already to the upside. Okay. All right. One more staple on Agra. Look how long that's been down, but yet a very big move that cleared this entire range over here. Sometimes that's when, at least temporarily it did. That's when these moves are can be interesting because they did break a major resistance high. Again, 200-day moving average right at this one, CAG. I think I've written some that I've just looked at this week. When we're getting into energy, These are looking quite strong as well. But this is Duke. Now, it did break up above that level. You've got another one in here too, PPL too, and that's just holding this point right here. So quite a bit to look at with these longer term moving averages. Now, one of the other moving averages a lot of traders will look at too, if I just change this to like a 100, which is just half the range or half the time. So now it's the same blue level, but you've got one, and that one actually is right at 100 as well. You know what else is there too? Is like NVIDIA, even though it was at its 200 yesterday, now it's at its 100 today, right at that top. So you got maybe a little pinball action. If it can break above that, maybe it's in a little bit more of a clear, but look where it stopped today. Isn't that interesting? It basically has been up most of today, but it's been holding in that range right at the 100-day moving average. The energy though, DTE, right there, just about the 100, getting kind of close to it. And then of course you've got others in here. Here's one just breaking out today. We don't really need the moving average much here. Let's just take that off. But this is within energy. This is Dominion. And you can see, even if I pull this back to a little bit longer term chart, folks, we've been here for a while. These are weekly bars right here. I mean, that is, my gosh, that's end of July, first part of August. We've really been holding that range. Now today, earlier today and yesterday, we actually started to break a little bit higher. But is there possible ground to make up here? We'll see. We know what's got to power a lot of the AI build out, right? That these tech companies are investing heavily in, and that is energy. So there could be some long-term drivers in there. You know, as we look at it, some of these companies have already broken out substantially higher. This might in fact be a, is it going to show it? No, it's not. So electricity and natural gas. So it does both, right? It's got energy, it's got electricity as well, but really just energy, broadly speaking, is there as well. But that one's, yeah, that one's kind of like sideways for a period of time. One last one in this group, EXE. Okay, a little bit, if you could see it, maybe a shoulder head. You guys seeing it? Shoulder. That extension, if we take the high, if it breaks above that neckline there, we just basically take the neckline on down and then shoot it up, and oh, what do you know? We're right up towards the highs there. So it is fascinating, but sometimes that is how it can move. By the way, this is one of these companies that does have earnings. Okay. We've already seen some pretty big moves from the bigger players out there, already broken out. CVX, Exxon, I think even stronger or as strong. Look at that. That's really, this one broke across a long-term range. And that's what may be interesting for companies that have been sideways for a while in a strong industry. Once they start to break out, look at this, break out and did what? Test, and then rallied. A lot of times it will test as opposed to just break out, but that's a pretty substantial move, you know, to the upside. That one, some traders, I mean, yeah, buying up there, I don't know. You're actually almost to 150, which can be a key level of resistance as well. There's so much going on here, but yeah. And by the way, Riceberg does point out that VZ, as we were looking at these, I think that was the biggest dog of the Dow, you know, as we looked at last year. And so, in other words, it had, if I'm not, it might have been at least the top three. Correct me if I'm wrong, but I think it was the biggest, it had the highest yield, dividend yield on it. Dividends can be cut at any time, but just a quick note, I mean, the yield was like very, very good over here because they've been, you know, raising the dividends to a degree. Prices have been going flat. So pretty interesting in terms of this group, but that's a massive spike. If you look at it this way, wow, we got a little bit of a bad candle there, but just stepping back is so helpful to flip to the weekly, because then you kind of get perspective. Where are we? Well, maybe this is a sideways channel and we start to hit up into kind of like a regular price move over here? That's the question. We don't know. But believe it or not, I mean, that was, yeah, dogs of the Dow. Oh, 6.1%. That was the yield when we were looking at it down there. So that's going to help the dogs of the Dow performance, no doubt about it, in terms of moves right there. All right, everybody. Well, that is basically what we had this week to keep an eye on. A few different things we talked about specifically. So as you come back over here, though, you do look at the S&P 500. Does this follow through? Just some key points to look at. What are we going to be able to do moving through that 7,000? Can we? If we can, the volume profile could be very, very interesting here too, because we just don't, I mean, it's a range we haven't been up above, so it could be a quick move if it breaks out. We have been trending sideways for a while, so we're kind of coming back into that area too, folks. Look at that right there. End of October of last year, we're still in that range. We're basically the same price as we were end of October. Yeah, end of October, even before Halloween. We're right there. So these long sideways channels, and like I said, if you take out tariffs, we talked about this last week and the week before, if you take out tariffs and you take out what else happened with COVID in March, March has historically been one of the stronger months out there, seasonally speaking, but we'll see what we get. You wouldn't know it over here because that's a look at your tariffs for March last year. So be watching some of these levels, keeping an eye on those, and some of the stocks that have really been performing, because we could see a lot of movement within those areas. And, once that trend starts, it can keep following through. Oftentimes there's a pretty clear range between what's leading and what's lagging. Those that are leading are those that are breaking out. All right, everybody. Well, hey, thank you so much, Brent, for your help in the chat. And it was great to have you all here today. Folks, as always, have a fantastic weekend. This is the last week of the class, and I'll look forward to future discussions with you folks. Take care. See you next time.